Right, well, thank you everyone for joining us today and good morning. My name's Daniela. I'm delighted to welcome you on behalf of Team Energy to today's webinar, Navigating ESOS Phase 4. We hope you find this session helpful in preparing for the next phase of ESOS compliance. Before we get started, there's just a few housekeeping points. So this session's being automatically recorded. And a copy of it will be sent out directly to you from Teams, so the same address that you got the registration from after the webinar. All attendees are muted just to minimise background noise. If you have any questions at all, then please can I ask you to use the Q&A function, which should be on the right-hand side of your screen, and we'll aim to address as many of these as possible during the Q&A time, which is at the end of the session. Unfortunately, we can't answer specific questions about your organisation structure or operations, but feel free to reach out afterwards or pop the question in. We'll take it away and we'll take a look, and then we can come back to you after the event. Any questions that we don't manage to get to, just in case there's quite a few, we'll follow up with post the webinar. So we will send that around afterwards. So yeah, on today's topic, with ESOS Phase 4 bringing new requirements and expectations around energy auditing and reporting, today we'll be exploring what's changing, what it means for your business, and how you can successfully navigate the phase with confidence. So I'm joined by two of Team Energy's ESOS Lead Assessors today, Sam, Arje and Tom McLeish, who'll be guiding you through what you need to know based on their experience supporting organisations through ESOS. Having been through 3 phases already, they're very much experts in ESOS at this point. What they don't know isn't worth knowing. So without further delay, I'll hand you over to Sam and to Tom to get us started.
Thanks, Daniela. Good morning, everyone. I think I know possibly a few of you on the call already, but for those that don't know me, my name's Sam. I am a lead assessor for ESOS. I was actually one of the first to be accredited in the UK back in phase 1, probably 12 years ago now. I also do other compliance work around the energy topics. And really my role today is just to put you at ease with the process for phase 4. As Daniela said, there's room for questions at the end, but hopefully by the end of this session, you'll be more comfortable with the process. Tom, would you like to introduce yourself?
Yeah, thank you, Sam, and good morning to everyone as well. Tom McLeish. I've been with Team Energy for 5 years and an ESOS Lead Assessor for 7 years, so just a little bit less than Sam. Similarly though, experienced myself with a wide variety of energy management topics and carbon reduction topics. Early this week I was surveying in person some leisure centres and schools, and it's great to see some new technologies coming in like air source heat pumps and solar panels. But also normally get busy with desk-based activity with my Chartered Energy Manager hat and ESOS Lead Assessor hat, which whether it's remote transport audits or energy management certification for ISO 50001 compliant organisations. What we're going to cover today, quite a few different topics related to all things ESOS. So first off, do a little bit of introduction about what it is and why it still matters, who needs to comply for ESOS, and what has changed from ESOS Phase 3 and how to prepare best for ESOS Phase 4, maybe some of the more pertinent topics for most organisations joining the call today. There are some common compliance mistakes which we see in ESOS Phase 3 and have carried forward some of them from ESOS Phase 2 and 1, and we'll try and advise on how best to avoid them, as well as how best to get meaningful information out from ESOS. We'll finish with a little bit about ESOS action plans and progress reporting, as well as some of the key requirements and compliance dates for all qualifying organisations. As Daniela mentioned, there'll be a Q&A at the end of it. Please put your questions in the chat. What is ESOS? So Daniela mentioned earlier that we are in phase 4 of ESOS now. It's been going since 2014. With the original intention from the Environment Agency, who mandates ESOS, that all large organisations in the UK will at least review energy saving opportunities. It's great, in my opinion, for organisations which might not have had the resource otherwise to look into energy saving measures, whether it's because they're a small operation and don't have an energy manager, or if they're a large complex organisation that has lots of disparate sites that might not talk to each other And ESOS is a great way to collate a lot of energy saving measures, a lot of great ideas from different people, internal and external to the organisation, and have these ideas reviewed by senior management. It's a two-part process for ESOS, including an assessment of at least 1 year's energy consumption for your estate, including your buildings, transport, industrial processes, and also typically includes site visits or site visits plural to a sample representation of your estate to identify energy saving measures. There are some risks involved in not complying with ESOS for any organisations that qualify, namely financial penalties, which some organisations on this call might have been hit with if they've been late with complying or provided poor quality energy assessments. Within the last 6 months, the Environment Agency has raised, when I checked the other day, they've raised about £750,000 in penalty fines for non-compliant organisations, on average of £20,000 per company. One aspect of their financial penalty is that the Environment Agency can apply a daily non-compliance fine if they deem that you're not engaged with ESOS and engaged with the compliance process. It also matters primarily because the UK has net zero by 2050 carbon targets. Whether or not you think that they might go with change in government for the time being, the best way for us as a nation to meet those targets is to save energy rather than, in my opinion, hedging our bets on investing in carbon capture technology or that kind of thing. So the best, any ways that we can achieve energy savings, ESOS being one of them, I think is still a great thing, as well as trying to mitigate the rising electricity, gas and oil costs, which are felt by us in our domestic properties and businesses, obviously, across the UK. Who needs to comply with ESOS? So in ESOS legislation, there's a definition of a large organisation. What that means is if your organisation has more than 250 employees or meets a certain turnover and balance sheet criteria, then you need to comply with the ESOS regulations. It doesn't apply to exclusively public bodies. There is a nuance in that if your public body, such as a council, has some private funding, and there is an exercise that should be carried out by your ESOS Lead Assessor at the start of the compliance process to determine if a part of your public body does actually does meet the private funded criteria. And there is a key aspect of qualification as well about group structures. So if one UK entity, and by entity we mean company typically, if one company in the UK meets that large definition, as in they have a certain number of employees or they record a certain amount of turnover in a balance sheet, then every other company in the UK group must comply with ESOS. That again is something that should be ironed out at the start of an ESOS compliance process to determine which companies might meet the qualification criteria. Do we have the correct account reporting that is on Companies House to help determine that? Do we need to work with financial teams to help assess which companies might qualify, and therefore if the whole group needs to qualify as well? What compliance actually looks like. So this will be different for different organisations depending on the industry that they operate in, depending on the amount of buildings that they have. But as a minimum, there should be a measurement of total energy consumption in all the buildings in the UK, as well as all the transport that's in scope, transport being any transport carried out in employee-owned vehicles or company-owned vehicles. You can, as part of that process, identify what is the significant energy consumption. If you want to not report on up to 5% of your total energy consumption for whatever reason that may be. And what may be involves the bulk of the work of an ESOS assessment is energy audits or building surveys. Building surveys, site surveys, energy audits, there's a few different ways to describe the same thing. It's typically an external assessor visiting a sample representation of your buildings and walking around with site management to help identify potential energy saving measures that are meaningful to the organisation and that can have a good impact, whether that's on energy savings, cost savings, or carbon emission savings, ideally all three. If, though, you could choose an alternative route for compliance, and that is ISO 5001, which is International Standards Organisation 5001. That is an international standard for energy management systems. That's quite a labour-intensive energy management system approach. It needs to cover 100% of all your energy supplies if you want to then have a less onerous task of organising separate energy audits and reporting. For ESOS Phase 3, only about 6% of organisations used a partial or full ISO 5001 coverage, so it is still a small proportion of organisations that do go that route, but it does save you a bit of time with your ESOS compliance, and in theory will drive larger energy savings as well. Once you have identified the energy saving opportunities, whether it's through ESOS energy audits or your ISO 5001 energy management system, they need to be catalogued, as well as a record of any completed energy saving measures over the past few years, which ESOS Phase 3 qualifying or complying organisations will have been familiar with. That was a new measure introduced for ESOS Phase 3. Once you have your reporting output, which again will be different in different organisations, it might be one building survey report and one company summary report for small organisations. It might be lots of building survey reports and a transport audit and a separate company report for large organisations. Once you've got that reporting output done, it needs to be signed off by your ESOS Lead Assessor, unless you have an ISO 5001 certification. It needs to be signed off and reviewed by your senior management. So I mentioned earlier the original aim from ESOS is that director level participants in your organisation will have to review a list of energy saving measures with some hopefully meaningful payback periods, some great savings, and they have to then decide whether they choose to take forward any of those measures or not. The last aspect of compliance is logging on to or creating an account on an online Manage Your ESOS reporting platform, and there's a fun task similar fun to completing your tax return for anyone who does that, where you have to enter details from your ESOS reporting output. A key point to note is that even if your organisation doesn't qualify for ESOS, if they don't meet the large criteria this time, even if they met ESOS Phase 3 criteria previously, you still have to log into the online portal and submit a do not qualify notification to avoid any nagging messages from the Environment Agency and any potential penalty fines as well. I mentioned earlier, compliance could look different, or rather will look different for different sizes and different types of organisations. Some of the typical outputs that you might expect to see as a minimum, though, are a summary of your energy saving measures identified, along with the potential savings in cost, kilowatt hours consumption, and carbon emissions, kilogram CO2e. Whether or not your organisation is best reporting with simple payback or more advanced payback measures like life cycle cost analysis should again be agreed by your ESOS Lead Assessor and the organisation at the start of the process. And that really refers to whether senior management wants to have indicated potentially beforehand that, yeah, they know that there are some great measures to be implemented and they want to know life cycle maintenance costs, they want to know other non-cost impacts of any energy saving measures, or if they want something simple and easy to read and therefore simple payback, the total cost savings of a measure as a proportion of the total anticipated cost, that might be most useful for them instead. The level of analysis output, again, will vary. As a minimum, you should expect to see some a breakdown of energy per energy use type, so potential energy broken down by electricity, gas, fuel oil, and then the diesel cars, petrol cars, that kind of thing. Ideally, you'd break it all the way down, though, to half-hourly level energy analysis for your building surveys, so you can see at what time of day is a typical building activity at its highest, when is equipment being used out of hours when it shouldn't do, that kind of thing. The bottom right of this screen is a screenshot of the aforementioned online manager ESOS portal, which I mentioned earlier. Looks like other government's type reporting that you might be familiar with. It's something that we as ESOS Lead Assessors can support organisations with completing. There are some challengingly worded aspects of that. It's like a questionnaire type return, but we as experts can help ensure that the correct information is entered. What's changed from ESOS Phase 3? So the short answer, which I hope is good news for most organisations on here, is that very little for most organisations has changed. There was talk, or rather proposals, for greater focus on carbon emissions and reaching net zero, as well as aligning the qualification criteria between streamlined aging carbon reporting and ESOS, which we think are very likely to come in for ESOS Phase 5. But for now, they have not made it into legislation. What actually has changed, the Environment Agency has taken away some of the simpler routes for energy audits. So display energy certificates and Green Deal assessments are no longer valid as a compliance route. I believe with a view to ensuring that organisations conduct a thorough energy audit rather than simply generating more of a compliance certificate. There is also a greater focus on energy audit quality. So this is a voluntary requirement for organisations. There are some recently released publicly available specification standards, or PAS standards, which organisations can, again, discuss with their ESOS Lead Assessor at the start of the process if they want to follow a route for energy audits to include more information about how to reach net zero, or if they want to assess their own assessment teams, so the analysts that might work on gathering data, the building assessors. If you want to assess them against these new PAS standards, you'd now have guidance for checking that these people that work on the project understand carbon emissions and greenhouse gas protocol properly. The last couple of bullet points are about action plan commitments. So you'll need in your ESOS Phase 4 to report on your completed energy saving measures over the past few years, which in theory, if you qualify for ESOS Phase 3, will be a review of your action plan and your progress update 1, your progress update 2. My colleague Sam will talk about those aspects shortly as well. We also need to report on any actions that you said you were going to implement from your ESOS Phase 3 action plan. You need to give an explanation as to why. So with your ESOS Lead Assessor, we can help agree on the suitable terminology, because the expectation is that information will get made public in the same way that a lot of information that you enter on the online portal is available for the public to see if they so choose. There is therefore consideration of what your stakeholders might expect for validation of energy saving measures that have been completed, or reasoning as to why any measures weren't completed. Okay, so how to prepare for ESOS Phase 4, and the key message here really is the sooner you can get started in ESOS Phase 4, the better. There are some obvious reasons, or potentially obvious reasons, namely to avoid a rush as the compliance deadline approaches. I think we've seen in ESOS Phase 3 and ESOS Phase 2 that despite the best intentions, a lot of organisations put ESOS towards the bottom of their list, and then when it comes to these organisations that leave it late, then find with some other consultancies they have to pay a premium for ESOS Lead Assessor who might have been available at a standard rate a year earlier, or that they find that organisation consultancies and ESOS Lead Assessors are all booked up, and therefore there's a risk that they actually have late compliance. So the sooner you can get booked in, the less risk of not meeting deadlines or paying a premium. And unless you're applying to maintain an ISO 50001 energy management system that covers all your building and transport related energy consumption, the benefit of booking an ESOS Lead Assessor early as well is that you can start the decision-making process earlier in terms of which sites to audit, if it's a multiple site organisation, if there are multiple companies involved, spread across different regions, and therefore ensuring that you meet the qualification criteria for complying with ESOS. And in terms of planning site visits, what we want to do is minimise disruption to business activity. So the sooner you can book site visits in, the sooner you can pick a time when there might be less people on site, or when, again, there's less disruption that is likely to occur. The other bonus aspects of booking the site visits sooner, and you can book those site visits anytime now. You don't need to wait until you get close to the next year's compliance deadline. The sooner you do them, the sooner you can actually implement and see any energy-saving measures. So if you were to implement your energy saving, let's say you did your energy surveys next October, you've still got a couple months before the deadline, great. But the benefit of doing these surveys this October 2026 is that if senior management go, yeah, there are some great energy saving measures, let's implement them now, you now have a year's extra energy savings, so a year's extra cost savings as well, which again is particularly pertinent when we are all paying quite a bit more, I believe, for our energy at the moment. Necessary for phase 4 as well will be the requirement I mentioned in the previous slide to review the implementation of energy saving measures from your action plans. So that also can be a complex task involved in speaking to different stakeholders in the business, different site managers, different facilities personnel. And therefore, again, the sooner you can get that started, the better, really. I think I will now hand you over to Sam for the following slides.
Thanks, Tom. Hi, everyone. So Tom's spoken for the last 20 minutes or so about kind of the facts, the detail about what you need to do to become compliant with ESOS. What I plan to do over the next 20 minutes or so is just to use my experience. As I said, I've been a lead assessor for more years than I care to remember. But over that time, I have come up with a kind of bucket list of common issues that are familiar to all kinds of organisations. And the idea is that I'll let you know about them now, and hopefully we can look at ways to avoid them happening. So in no particular order, I'm going to start with forgetting account login details. It sounds obvious, but as Tom mentioned, there's a government portal that's used now for all ESOS submissions. It's called MESOS, MESOS. Typically, you'll only do a submission once a year for ESOS related work. And, you know, as we're all familiar with, if you put a random password in a year ago, the chance of remembering it a year later are very slim. It's a government run organisation, the Environment Agency, and they're not the quickest at responding to requests for new passwords. It's not an automated system. So just a recommendation here is just every 2 or 3 months, just log in, just make sure that you know, your passwords is still recognised. Maybe share that information with a colleague in your organisation. You know, if you were to win the lottery and head off to the beach midway through the year, if no one else has those login details, it could be a problem. So just keep familiar with logging into MESOS. Tom talked about it, but I will reiterate, leaving preparation too late. Again, just from experience, we have had to turn away customers who've come to us, for want of a better term, last minute, where we just simply are too busy and don't have the time to be able to serve them. So, you know, the sooner we start talking with you, or you start talking with us, the sooner we can plan in when we're going to do the work and just make sure all deadlines are met. Not including all entities. So Tom briefly discussed about the importance of just understanding your corporate structure. The number of customers who've come to me saying, I've had a letter from the Environment Agency stating that so-and-so entity has not been included, or, you know, why is this not been included? It's not an immediate penalty. You do have time to resolve it, but it just saves a lot of time if upfront that information could be gained. One common issue with regards to entities is quite often the trading company might not be the UK highest entity. So, for example, the organisation you work for may have a holding company above, or several holding companies. Ultimately, the Environment Agency are looking top down. So they will look for all the highest UK entities that aren't registered, if that makes sense. So just because they're a holding company or a company with no operations, they still need to be included. So very, very important. Missing out sites or energy streams. I'll start with the sites element. What I mean by this is if you qualify, every single building that uses a drop of energy has to be included in the submission. So if you are a huge organization with several retail stores and you just happen to have a storage shed in someone's garden where you keep some equipment that has one light going in there, that has to be included. If you get audited and it's found out it wasn't included, that would be a fail. So no matter how big or small the building is, we need to include the energy use. And energy streams, this is more along the lines of which energy is going into those buildings. So typically a building will have electricity of some kind, be it self-generated or from the grid. A lot of buildings have gas, but then there are a lot of smaller energy sources that sometimes can be forgotten. Things like oil, things like LPG, this kind of stuff. Again, it all needs to be included. And the same with transport. So just to reiterate what Tom said, we're not looking for all transport. We're not looking at flights or train journeys where you don't own the vehicle. Obviously, if your organization has a private plane, good for you, and that does need to be included. But if it's just a typical commercial flight, that doesn't. The key things are company-owned or leased vehicles of any kind. So that could be cars, lorries, vans, machinery, or company-owned vehicles, or employee-owned vehicles that are used for business purposes. By business purposes, we don't mean commuting to or from work. We mean if a trip is taken in an employee's own vehicle, again, doesn't matter what kind of vehicle, where they have claimed back expenses as a result of taking that journey. So typically it would be, perhaps going to a meeting, driving there, it's a 100-mile journey at 45p a mile, you might claim back £45. Those are the journeys we need. And it needs to be ideally in mileage or fuel consumed. Poor quality or incomplete data, again, another big issue. As companies have got more and more familiar with ESOS, obviously we're moving into phase 4 now, but a lot of companies have been in there since the start. A word has cropped up more and more, and that word is estimation. I just want to kind of put to bed some myths around estimation. Yes, we can use estimation if we need to, but only as a last resort. And if you do get audited, and I'll talk about Environment Agency auditing shortly, but if you do get audited and they find that you haven't made every effort to get actual data, again, that will be a fail. So just saying that's going to be hard to get, so we'll estimate it. It's fine if you don't get Environment Agency audited, but if you do, that would be a fail. I will stress, though, at the same time, quite often with energy data or transport data, sort of 95% of it you'll have sitting easy to get hold of, and it's normally just the last 5-10% of data that is a real pain to get. It might be a building that you've recently moved out of. It might be some car transport expenses that haven't been submitted yet by the employee, and you need to chase them individually to get that information, whatever it might be. If it really is going to take unrealistic amount of time to get that information, we do allow, or the Environment Agency does allow 5% of data to go into what's called de minimis. Again, that's not a get out clause. It shouldn't be a kind of go-to by default, but it's if it really does become too difficult or take up too much time, we can use that de minimis. But the key point about this issue here is around the estimation. Please don't see estimation as the kind of default. It's a last resort. Failing to audit a representative sample of sites. By audit here, I'm talking about a building survey. The requirement, and the wording is quite vague, is a representative sample of your building uses need to be surveyed. And this is a grey area because obviously it's are you looking at what the building does, the age of the building, the size of the building, the location of the building, what makes it representative? Ultimately, the lead assessor, the ESOS lead assessor you work with, can say yes or no, representative sample are being sampled. But what I'd say is we're not looking as granular as location. So, geographical, if you're nationwide, we don't have to go to a building in every part of the country. If there's different building uses in different parts of the country, so for example, if you're a retail company that also does manufacturing, and the manufacturing element, this is probably a little bit stereotypical, but let's say is up north, and the retail's mainly down south, then yes, there would be a geographical difference in use. But if the same operations are done in the north of the country and the south of the country, or in Wales or in Northern Ireland, we don't need to visit different areas. The main key thing here is different uses of what is done in the buildings. So if you just have 5 offices dotted around the country, all kind of similar operation, to me, visiting one office would be sufficient. However, if you had an office, retail, manufacturing, warehouse, storage, at least one building of each of those kind would have to be sampled. So again, at the kind of initial stage, we will sit with you and just confirm that a representative sample of buildings are, or we don't believe are, going to be sampled, and talk you through what we think. But it's just something to bear in mind. A common fail on an Environment Agency audit is if they find that too few buildings have been audited because they don't cover the whole scale of what the business operation is. This happened quite a few times on ESOS Phase 3 for me. So leaving director sign-off and submission to a later date. It's really important to note that compliance isn't complete until that final submission is done on the ESOS portal, and there's a big green button that says submit to regulator. That is the final stage, and you can't click that until all the previous bits are done. So it's just worth knowing that even if you've done everything up to that point, but you haven't clicked the submit to regulator, you are not compliant. And a number of companies were ready well in advance. They sort of said, okay, we'll just read it through a couple of times, just make sure we're happy, and click the submit to regulator button, and they forget about it and they miss the deadline. So just remember, you could get everything done a year in advance. Until you've actually submitted fully on the portal, you aren't compliant. Direct sign off. So before you click that submit to regulator, it has to be signed off. It doesn't have to be literally signed off with wet ink, but acknowledgement from ideally a named director on Companies House that they're happy with what's going forward. Again, that could be, you or I could be working together. We're happy with everything. You just then pass it on to your director for sign off. It sits in his or her inbox for weeks. They forget about it. They go on holiday. They might be busy with other stuff. Again, we cannot click that submit, or you cannot click that submit to regulator button until the director has signed it off. So all these little things are just, they might seem small individually, but it's amazing how often they creep up. I am going to talk about deadlines for Phase 4 and key dates shortly, but what I'd recommend is just putting in your calendar what those dates are in your Outlook calendar or your paper calendar, and just have a reminder there a couple of months in advance. You can set reminders just so nothing comes to you as a surprise. This shouldn't happen, but it did happen in Phase 3. So midway through Phase 3, which is the previous phase, the Environment Agency decided to move the goalposts and make some changes to the requirements needed for ESOS. And a number of organisations were brilliant, doing everything we recommended, did all their work in advance, got everything ready, got everything done. And then the Environment Agency said, actually, we want this, that, and the other added to it, which meant in many cases having to go out and re-audit buildings and do a lot of additional work to meet that. They have confirmed, due to a lot of feedback, that they aren't planning on doing anything like that for Phase 4. But I just want to make you aware that they probably would have said that for Phase 3, and they did it. It's also a government-run organisation. I'm certainly not going to get political now, but if there is a election and another party come in, things may change. If you are registered on ESOS, which is the portal, you will get emails from the Environment Agency telling you of any changes. If you work with us, your lead assessor will let you know of any changes, but it's just something to be aware of. Okay, so just don't ignore emails if you see any like that. And finally, ESOS, I don't think we actually mentioned, but ESOS stands for the Energy Savings Opportunity Scheme, and energy, that first bit is key. So as we all know, there's a lot of focus on net zero and carbon reduction right now. But just to remind you, ESOS, this piece of compliance, focuses on energy side of things. And so, a number of times customers might say, well, why aren't we talking about electric vehicle charging points or solar panels or other renewable energy? We absolutely can talk about it, but they don't actually count as energy savings, because by definition, you are still using the same consumption. If you've got a big solar array on the roof, it's just come from a much cleaner source. So ESOS is all about the kilowatt hours of energy you're using. So just bear that in mind, that if you're doing some wonderful things for the environment from a carbon perspective, that ESOS is around energy use. Just a couple more slides that I just want to go through. What I'd probably say is, when you've done your ESOS Phase 4, and I realise many of you on this call will have done certainly Phase 3 and probably earlier phases as well, so this might not be used to you. But just as a recommendation, just remember, a lot of the recommendations we will put on an energy report are quick wins, and the majority of them will probably be no charge to implement. They will just require a change of the way you do things. We fully understand that, while the cost of energy is going up, it's slowly getting more and more notice at board level. But businesses run and have many other issues to be thinking about. Energy is just one of them. And so us putting a report together saying, you can spend £50 million on these changes and you'll save 50% of energy, sounds fantastic, but we also have to be realistic. A number of the recommendations we put on there will be zero or no cost. And as a lead assessor and someone passionate about sustainability, all I can say is just give things a go. Not everything is going to work, but you might see some recommendations on there that, what we call wallpaper recommendations, where all it took was someone from outside the business, a lead assessor, to go in and audit the building and notice something that's been staring you in the face for years, but because you've seen it every day, you may not have noticed it. So little changes, things like having blinds open by default in the morning, sounds silly, but actually the number of buildings we go to where the blinds or the curtains are never opened, which means lights just go on by default first thing. We go in, we do a report, we report it as we see it. As I say, give everything a go. Not everything might work, but I'd say, give all suggestions a go. And also, if someone holds back and shows some barriers to those suggestions, question why they don't want to give it a go, or what's wrong with the suggestion, or what's not working. As I say, there will be some recommendations in the reports that have cost to it, and it might be your job to approach directors to get some CapEx or some operational OpEx spend to implement them. Our ESOS reports at Team Energy give you a full breakdown of paybacks. As Tom said, it can be simple payback right up to LCCA, life cycle cost analysis, whatever's required. But the information we give is detailed, significant, and should be enough to give you what the purse holders need to make their decisions. And also remember that even if something does cost money, and a lot of the time the payback is under 2 years with energy saving. So, in any other form of the business, a 2-year payback might be a no-brainer. So just because something costs a lot of money to implement, if it has a relatively short payback, it might be considered. And remember, although you only need to get these signed off once every 4 years, keep those board members updated of how things are going. They are busy, but they will be interested. And actually, whoever you get to sign off at board level for the submission has put their name against it. So, keep them updated of success, more importantly, and, make them enthusiastic about it. And finally, you can't measure anything, you can't manage anything, I should say, that you can't measure. So, if you do implement something, try and record if it has saved any energy. Use facts, use meter reads, invoices, whatever it might be. Last couple of slides, and I'm going to go through these quite quickly. Everything we talked about up till now has been the actual ESOS report. So the ESOS takes place every 4 years, but in between that, there's now the mandatory requirement to do what's called an ESOS action plan and an ESOS action plan update. They run annually, the action plan is run in year 1, and the action plan updates are run in year 2 and 3 of the 3 years in between each ESOS phase. So just to put that in real world, the compliance date for ESOS Phase 4 is December the 5th, 2027. The first action plan will be required in December the 5th, 2028. The first action plan update will be required December the 5th, 2029, and the second update will be required in December the 5th, 2030, and then ESOS Phase 5 will kick in. So we now have an annual requirement. It's all done on the ESOS portal, and again, if you've done Phase 3, you'll be familiar with this. It did only get brought in for Phase 3. But basically, the way I like to word it is an ESOS action plan is a commitment, really, you're making, a public-facing commitment as to energy savings you're looking to achieve for those 3 years in question that the action plan covers. So my advice will be don't overcommit, because they do get published. And while on year 1, it will look great, say you're going to make huge energy savings by doing X, Y, and Z. But in the annual updates, you then have to report, did you actually go ahead with them or didn't you? And if not, why not? So, that potentially requires a balance between not overcommitting and having then to say we didn't achieve what we set out to achieve, but not putting too fewer things on there either. And again, Team Energy can work with you on how best to put that together. These don't need an ESOS Lead Assessor sign-off, but our job at Team Energy as Lead Assessors will be just to make sure that everything on there is compliant if you did want to work with us, but it's not mandatory. Key dates, I've kind of touched upon this, but just so you're aware, Phase 4, the compliance phase, is 6th of December 23 to the 5th of December 27. I'm not going to go into any detail now, but Phase 3, the previous phase, got moved because of COVID. These are the compliance dates for Phase 4. The qualification date is a key date, is the end of this year, the last day of this year. This is when you have to decide if you're in or out based on the criteria Tom mentioned about the 250 staff or the 48 million turnover. The deadline is then the 5th of December next year to do ESOS, and then the first action plan is required a year later. For some reason, they like the 5th of December. So, again, that's probably something to bear in mind. You might consider it as deadlines being by the end of the year. Just remember it's the 5th of December as opposed to literally the end of the year to allow yourself enough time. ESOS is here to stay. It is a compliance that has had very good feedback. It's because you get those building reports and a little bit more bespoke recommendations, it's seen as a lot more than a tick box exercise for most organizations. Remember, data is published for ESOS and your action plans. It's going to be hard to find, but if you know where to look, it's there. So, potentially some of your own customers, if they were that way inclined, could go and look at what you've done for ESOS and your action plans. Remember to allow contingency time. We've talked about deadlines, but they are exactly that, deadlines. As Tom has mentioned, we can start on ESOS Phase 4 today. We can absolutely help you here at Team with the final submission process, but the actual submission itself has to be done by someone from the reporting company. So we can sit on a call, shared screen, where you're in the portal, but it has to be done by someone from the reporting company. And again, just from experience, the portal does sometimes have issues. It's a big website where, particularly close to the deadlines, a lot of people are trying to access it. So again, just bear that in mind, that if you are going to leave stuff to the last minute, that you can't always rely on the portal working. I'm going to stop now. That's all I wanted to cover. I hope that was useful. We are open now to some questions, and I think Daniela is going to chair this short session.
Yes, thank you very much, Tom and Sam, for that. We had a few questions during the registration process. We'll start with those, and then we've had a couple come in as well during the session. Now, if you have any questions that you think of, please pop them into the Q&A and we'll try and get to them. If not, we can always answer them kind of post the webinar. So the first question that we had in was, I've been told that to qualify, we need to add all businesses together, holding company with 2 other companies under it. For example, combine all balance sheets, and if the total from all exceeds, then we need to comply. Is this correct, as I don't read it like that on the ESOS website?
Yes, so I'll answer this first one. So hopefully we covered this in some of the earlier slides about qualification criteria, but the the way it must be looked at is qualification of one company, one UK-based company in your corporate group. So, yeah, if even if your organisation reports consolidated group accounts or aggregated group accounts, there must be an exercise done to determine individual companies in the group and if they qualify or not. That is how ESOS qualification criteria is determined. Yeah.
And from the same person, I've been told that the notification for compliance must be December 2026 and the data set must include this date. But how do we notify compliance by December 2026 if the date hasn't passed yet?
So, yeah, I think from Sam's previous couple of slides with the dates mentioned on there, that should hopefully be a little bit clearer. The person submitting that with the qualification date being the 31st of December 2026 and the compliance date being the 5th of December 2027. Easy misunderstanding to make, qualification compliance date, but yeah, it's really by the end of this year, by the end of 2026, organizations should be determining if one of their companies meets qualification criteria, the 250 plus employees or the financial criteria, and then by a year later, they should be submitting their completed ESOS Phase 4 compliance.
Can I just add something very, very quickly onto what Tom said? So Tom said exactly completely factual stuff there. I guess the question leading on from that is, well, how do we know if we're going to have 250 employees by the end of December or meet the turnover? And that's very true. You do have to make a kind of judgment. I'd probably say that if you've got over 250 employees today, unless there's anything that we don't know, you're likely to still have 250 employees on the 31st of December. There's also a little bit of guidance around, even if you don't meet the criteria this year on the 31st of December, but you have met the criteria for the previous 2 years. So on the 31st of December 2025 and the 31st of December 2024, even if you then don't meet it this year, you are still actually in scope. So it's either you meet it, no questions asked this year, or if you've met it for the last 2 years, even if you then don't meet it on the 31st of December, you still are actually obliged to do an ESOS Phase 4 submission.
Next question, are there any councils under the London boroughs registered for ESOS?
Do you want to take this one?
Yeah, I'll go this one as well. So so Sam mentioned earlier that you can check the submitted ESOS Phase 3 compliance from organisations if you navigate to the Government UK website. You can also see similar for ESOS Phase 3 submitted action plans. So that's one area where you could check that if you want to be doubly sure. But maybe the bigger question is whether it's a public body or if part of the London Borough Council is privately funded. So I did mention this as well at the start of the call. We have worked with council-based organisations that do have private entities for generating profits, basically, and therefore they are in scope of ESOS. But yeah, that'd be a task if you're part of the council, the council who might submit the question, then that'd be a question to discuss with your ESOS Lead Assessor to determine if any parts of your organisation are privately funded sufficiently enough to then fall under the ESOS qualification criteria. If not, then in theory, public body would be exempt from ESOS, so wouldn't qualify.
Okay. What is needed for us to be compliant in Phase 4 if all of our actions were marked as won't do in Phase 3?
Should I take this one? It sounds like it's an action plan or an action plan update query. Just going back a bit, it's worth noting that ESOS submission action plans and action plan updates are all separate compliance pieces of work. What I'd say, if you qualify for ESOS for the phase, so let's move forward. If you qualify for ESOS Phase 4, you are obliged to submit an action plan and an action plan update as well for the next 3 years after ESOS. Even if you're not planning on putting any initiatives in the action plan, you still have to submit an action plan. It's literally called a no initiative action plan. You cannot just ignore it. So in answer to the question there, I'm guessing a little bit with the wording. He meant that he has issued an action plan for phase 3, saying that they are not going to go ahead with any of the suggestions, which is absolutely fine. But you still then have to each year do the action plan updates, saying there have been no changes to my action plan. And then if you qualify for phase 4, you will still need to do an action plan and an action plan update for phase 4. Again, even if they simply state we don't plan to do any initiatives, and then the updates say nothing has changed. Does that cover it? Tom, did you want to add anything?
No, I think so. Yeah, thank you.
Okay, and then onto a few questions that have come in during the session. So regarding data that's included in the ESOS submission, what about electric car schemes with salary sacrifice that technically the company leases on behalf of employees?
So I'd say the question relates to if the cars, what the cars are used for. So if the cars are used for business purposes, so pretty much anything other than commuting from your home to your place of work, then those cars will be in scope of ESOS. So it's not terribly important whether it's an electric vehicle or how the vehicle is leased to employees. If it's a vehicle that is owned by the company or leased by the company or owned by the employee and it's used for business purposes, then yes, there would be that would be a scope of ESOS.
We have an office in the Republic of Ireland. Would that need to be included?
No. Sorry, I'll take this. No is the short answer. It's mainland United Kingdom excluding Channel Islands. So Northern Ireland would be, sorry, not mainland. It's United Kingdom excluding Channel Islands. So Northern Ireland would be included, but not the Republic.
Yeah, I think if I'll add, I think the Republic of Ireland does have a very similar ESOS type compliance piece, but yeah, as Sam points out, it's not managed by the environment agency. I believe it's a separate reporting process, but they both are fed by EU regulations back from, well, yeah, I think back from 2014. Yeah.
Can ESOS audits be carried out at any point within phase 4 compliance period to be valid for phase 4 compliance submission?
Yes, is the answer. Well, certainly from now onwards, let's say. The one thing we didn't touch upon, which is probably needed for the answer to this, the audits can be done anytime. The company report, which is kind of the second half of what's needed, can only be done next year. And the reason for that is the 12 months of data that Tom talked about for the company report, for the main submission, has to include the 31st of December 2026, the qualification date. So by definition, the 12 months, the earliest it can be is 1st of January 2026 to the 31st of December 2026. Obviously, we're now only in May. However, the building audits, building surveys, whatever you want to call it, can be done from now onwards. They don't have to be the same 12-month worth of data. So yes is the answer. The only caveat is the same building can't be audited less than 12 months between phases. So if you audited a building right at the end of phase 3, let's say, and you wanted to do it, on the first month of phase 4, you can do it. It wouldn't be valid, but we're now past that stage. So from now on, any building can be audited, even if it was done in phase 3.
The 1 year's worth of data that needs to be submitted, how old can this be? So for phase 4, can we use 2024 data?
Shall I go, Tom? Yeah, it's.
I think you mentioned it a second ago. Yes.
Yeah. So for the building report, any data can be used as long as it's kind of relatively up to date. But for the company report, no, it has to be 12 months, including the qualification date, which is the 31st of December 2026.
Okay. And I think last question, can you please elaborate on the fines that can be accrued? I was under the impression that it's more a reputational issue if not compliant.
Yes, I I'll answer this. So there is a legislative mechanism for the Environment Agency to apply penalty fines for anyone who is not compliant with ESOS Phase 3. They also have the means to apply penalty fines for non-compliance of ESOS Phase 3 action plans and progress updates, even though the wording for action plans is a bit more vague. But yeah, the Environment Agency can and have absolutely applied fines. You would normally get a few chances to get your act together if it's a late deadline. They normally will ask you, what is your company qualifying for ESOS? And at that stage, you might go, we've potentially reported it under a different group name. Was one of the common compliance mistakes that Sam mentioned when it comes to the online portal reporting process. But if you were the type of organisation to ignore repeated communication with the Environment Agency, where they're asking for your input on whether your company qualifies, have you done a compliant audit, etc., then absolutely, yeah, they have in our experience applied fines, and you can navigate to a Government UK website to see previous fines applied to organisations, yeah, which they're applied on a bit of a scale that is applicable to your organisation. So yeah, they can be in the tens of thousands of pounds for larger organisations which yeah, haven't been compliant.
Okay, thank you very much for that, Tom and Sam, and thank you for everybody for joining today. I hope you found this session useful. If you have any further questions or would like to discuss your ESOS compliance at all, then feel free to reach out on the details on screen. We'll share these webinar slides out with you this afternoon so you can reference them when you need to. So yes, so thank you very much. Hope you'll have a good afternoon.